All right. Thank you for joining the Future Initiatives live trading recap. I'm here with our great friend Dubster. And as we
Yeah.
walk through our trades that we took today, our setups for tomorrow, and our weekly and daily bias. So today we had CPI come out before market open. You and I were both up pre New York market open to watch the price action, not to trade it, but to watch it.
Yep.
But throughout the day, you and I were going back and forth on what is a good entry, when do we want to enter, what looks to be right. So we did take some plays together, and let's go ahead and recap them. I'd love to hear your approach to today's trading, as well as what you believe is to happen next.
Yeah. All right. So I actually took two different trades today, and um the setups were exactly the same. We're gonna go ahead and start with SPY and QQQ. And as you guys can see here, I have a 15-minute healthy order block in this section that I drew out. But what I did something different to my strategy today was that whenever I drew my Gann box, I started including that made this the healthy order block. So the reason why I started doing this is because I've noticed that a lot of my rejections are coming off of this fair value gap, but at the same time, I've been feeling more comfortable when they also enter the order block, the healthy section. So if, as you guys can see, this section here between SPY, which is the same setup we have here, the order block with the fair value gap, Gann box setup, we wanted a 0.5 entry. And if you guys actually pay attention to price action, it never hit my section here. Never did. But if you guys go up, this setup is, we went ahead, let me go ahead and drop it down. If you guys look at this, we have a healthy order block here, fair value gap in this section. Went ahead and drew the Gann box all the way down. Once we drop down to this section, you guys can see that I drew these two sections right here as a Gann box entry, and it wicked me in exactly where we wanted to go inside in. So I went ahead and I actually took puts here for QQQ, and I also used Quantastic entry as a confluence in this section. Quantastic analysis was also for the downside. His target was today's low. My target was also today's low. I I really wanted it to hit this section here for the break of structure. That was my main target. Then I went ahead and I asked Quantastic what he wanted to target, and he asked for the day of low, which is pretty much what everyone wanted to target today. Um, these contracts right here did run 105% to be exact. Beautiful trade. The entry was fabulous. It was amazing. We were gonna go ahead and swap down to QQQ. I mean, Nasdaq. So I wanted to show you guys something that I learned today. We took a lot of rejections off of these fair value gaps here. There's a fair value gap here, and we have a healthy order block in this section. I actually did not include the healthy order block today in this specific section here because of what was happening, of all this consolidation that was going on during this time and this specific area right here. So I had this drawn out. I had this order block drawn out for QQQ, and I had a setup to go to the downside early in the morning. But if you guys can pay attention here, there's a fair value gap here. I did not take this play to the downside because when I drew the Gann box at the time, it never wicked into the 0.5. So I went ahead and I discontinued this play from QQQ. And unfortunately, I missed the downside early in the morning, but because of my specific strategy. So when this happened and it started showing to the downside, I had already a setup shown for NASDAQ at the time here. And the reason why I have this set up here is I was iffy with QQQ But the fact that at the time when we go down to the 5 minutes, there is a lot of consolidation in this specific zone. So I went ahead and I just took the confidence in taking the downside with only one micro, and I resulted ending up with $96 in profit with this trade here. So it was not a specific strategy as in the normal one but I went ahead and I took it because I know there is a lot of consolidation on this area, and when it was also a fair value gap. So that's the reason why I took this trade. It was nothing compared to the previous ones for spot, but it still was similar to the specific strats that I use. What do you think, Fantastic?
I'm actually looking at it, and I like it. I like how, you know, you have several points of confluence, even if me entering into a trade, to use as confluence. And like you said, we wanted to hit the low of the day.
Yeah.
I believe that large wick down was the low of the day, and the consistent retest of the large wick down from CPI was our indication to take buy side liquidity.
Yeah.
That was something that I picked up today. I would say let's go to a higher time frame. Let's go to like a 30-minute and 1 hour. There we go. Okay. Now, okay, yep. You were just over it. You see that big order block right there to your left? Down? Right there. Right. Let's put the GAN box on it and find the consequent encroachment. I'm sorry, the mean threshold. Yep. Let's go and find right there. A little bit lower on the top. Just the top of the red candle. To the wick. Yeah. That's fine. It serves our purpose. Now let's drag that out across.
You want a line to cross?
Let's drag it out to the right. Yep. Okay, now let's scroll to the right. What do we notice?
Came down wick to this area. Consequent encroachment.
That's exactly right. But what did it also do?
Bounced, rejected from here.
Okay.
Grabbed the sell side liquidity from this section here.
Yes, that's exactly right. It grabbed the sell side liquidity, which if you went long, was that on the 8th last week? Then you are stopped out essentially. And
yeah.
and so then and I believe now we are going to see it retest those lows, grab that liquidity down below, just not quite as low as we went today, but you see those wicks above it. Like right where the 0.25 line is.
These sections right here.
Right, that's my expectation for that liquidity to get drawn to.
Okay.
And then we go and take out the rest of the buy side, because the point of going back and forth is to trap liquidity on one side or another, right? If we have already run the liquidity on one side, why are we not running it on the other?
True.
So you can look at this and say, oh, it's a head and shoulders pattern. That's cool. You can look at this and say, actually, this is a failure to go lower. And we took out the intermediate highs. But if we take a look at this, we went low, had we had a lower low, had a higher low, had a lower high, and now we're continuing to go higher and higher and higher. So I do expect that to get to have a lot of the liquidity drawn upon and then a large run up. And the guise of PPI and unemployment data is the perfect notion for that.
Makes sense. Okay. I see what you mean. You there, Quant?
Yeah, yeah. I'm looking at the charts and I'm liking the Asian session that we're currently in, seeing how it's printing, seeing how we took out the highs of the end of the day.
That is true.
Actually, yeah, this is fantastic because it confirms what we're saying. Now we're going to retrace the lows, and if you want to be safe, you can put a target at the mean threshold that of that order block right there, and say this is a target for the downside.
Yeah. Possible rejection from here.
Exactly. You already have a plan.
Retracement, if anything, comes back down. Grabs
Boom.
this section.
That's exactly right.
Okay.
So how did you come out on the day? Were you green? Were you kind of at break even? Were you red on the day?
I was actually green. I took that one trade. I took one trade on take profit, which is the one I showed you guys from earlier. And that was actually the only trade I took for that account. I did take another cause. I took cause down here. Where was it? That was on a different account. So I was green in both accounts for the end of the day. I went ahead and where was it? Oh, I remember where I took them. So I believe it was a 15-minute entry. Damn, I lost myself where we're at. Oh, right here. Here. So there's this fair value gap, this section right here.
Mhm.
Wait, let me grab this guy. Well, anyways, there's this fair value gap right here that I wanted it to say it bounced off before, but the fact that it never closed in this section, I felt like this wick was just an entry, a sign for it to come back down. And obviously this is a healthy order block that I like playing based on. So I went ahead and I had the GAN box section drawn up through this section. But on this entry right here, I had this drawn out. Once it entered this section here, I dropped down to the 5 minutes and I expected an entry around this specific fair value gap. But that wasn't the only reason why I expected it to come down. I also used a fib for this specific one. And if I remember correctly, oh, wrong one. Let's see. There's a fib retracement that I used for it to come back down, which was the target on this specific section here. This was a target, this fair value gap off the section. So pretty much the point of this was the fact that I drew my healthy order block, including the fair value gap, expecting it to retrace to this specific section here, just as a sign saying, hey, look, I want it to come down here and go ahead and look for this area for an entry point to the upside because we took puts up here. This was a put. So I obviously wanted to see exactly where it wants to reach, retrace and reject from. But at the same time, we were targeting these lows when we were where we were on these puts. But at the same time, I expected the whole reversal. So I went ahead and I took cost from this section off of this fair value gap. But this whole entry point was just specifically based on the fib, and my 0.5 with the healthy order block was just a specific section where I wanted to recognize where price action was going to come to and then bounce from there. That was pretty much
Right.
the setup that I used today. There's so many different things that I put in play into motion, but in the end zone, the fib is what really helped this setup. It helped it a lot because I had a specific entry, and it just gave me much more confidence to go ahead and take a play here because stop loss was going to be below this guy, the 0.5, because that was going to be my first entry. But at the same time, the fact that we had this consolidation here, I wanted it to go out for a quick scalp on futures with the mini, and then expected it to reject from here and come back down, which obviously it didn't. But I did take profit up here. I was with a mini, so I was like green for the day for this specific account.
I like it. I I like that entry a lot actually. I actually took a similar setup in a way, but I took it on the downside.
Okay.
So when and I can go ahead and share what I'm looking at. So if you see this, so currently we're on the 4 hour. Let me go ahead and drop down to the 15 minute. So you see how we came down from up here? We had taken out the buy side liquidity. This
Okay.
took out that 15-minute fair value gap. But I had a 15-minute, I had a 4 hour, which was awesome because the 4 hour played out nicely.
Hmm. I think it
But
froze on me. Oh, there you go.
oh yeah, sorry about that. But so if we look at this, I took the trade around here. I saw that we came down. We failed to go higher. We failed to reject because we had already taken out the buy side. That was my indication to go ahead and start sizing into a short position. The failure, we go up higher. We failed to go higher. It dropped down, dropped out of the fair value gap, comes back up off the 4 hour. My entrance was right here at this candle here at was it 2:30, and I took it down. So it was a nice 20 bar play, but I scalped my way down. I'm still working on holding it. I was able to hold for the full 20 bars, but I did scalp my way down and until we got to my target area right down here at the 4 hour fair. Actually, this is the daily fair value gap. So I wanted to keep the daily fair value gap in play just so we could see what's going on since it's still likely for us to run back through it. But that was my target from 16, well, really from 15,595 down to 15,505. That was where I wanted to take the trade, but that's pretty much what brought my profit in. Now, in the morning, I did take an options trade. I saw that we failed to go lower again. Therefore, once we ran past the daily fair value gap, we retraced, came back up, broke the 4 hour. I said, okay, this is time for us to go. We got in, rode the wave down, took profit. We came back up. I was still holding half my contracts as my expectation was to have this move come much quicker. but we began to average down as we went up, caught it back at the top, and had it run all the way down. Wow, that is a rather large drop. But that was the trade that I wanted to see. And I see where you had seen the immediate rebounds, the failure to go lower, and
Mm-hmm.
took it up. That, I mean, that's a perfect play.
Yep.
And I know that we took one earlier to the downside here based on the rejection from the top side.
Yes.
And we wanted to see that Judas swing retracement. Unfortunately, the Judas swing was actually this drop to the downside, which we had initially thought would be the run up to the upside,
Yep.
which is totally cool. You know what? It helps us to learn more about trading CPI and trading heavy news days.
Yeah. Question.
Sure.
You have the pink film top. Now that
Mm-hmm.
all your candles have been, I mean, price action has gone through it, or in this case, it's almost about a break.
Sure.
That one right there. When would you close it out? Do you consider closing it out now, or are you gonna wait for it to just go up out of the fair value gap and then come back down, or when do these fair value gaps get eliminated off your chart?
So after it's run through it a few times, but even now, the old 4 hour fair value gap is still in play. It's still holding weight.
Okay, I see. So I think that would be one of the most difficult tasks at the moment, trying to figure out which fair value gap to leave open and which one to close out.
Right. No, I mean you're absolutely right. Because it's hard to know when to close out a position and when to keep it open, or a fair value gap. A lot of times, and even when there are packages that automate the fair value gaps, they close them out the moment prices run through it. Well, I like those fair value gaps to stay there, especially the higher time frames. Because let's look at the 4 hour. This got run through, but guess what? It's still respecting it, right? This is still being respected.
Yeah.
Look at the daily. We still have some room down here. We still have some room over here. I mean, we're seeing this be respected a ridiculous amount, which is incredible to find. So that is one reason why I enjoy having the higher time frame fair value gaps stay there. Anything 1 hour and above, I enjoy it staying there because we're going to see price run through it, want to run away from it. I mean, even let's look at this here. So let's look at the 4 hours. So we're on the 1 hour. We see, I mean, look at the bodies and the wicks. It respects this to no end, which is what we like to see because that helps with our entries. Because one of my setups is the moment we're driving up into a fair value gap, I'm going to wait for it to come back down. And if we retest and drop, then I get in. If we come through the fair value gap and we continue to go up and we pass consequent encroachment, the median line, and we come back down, now I want to see this rise through. Because when you drop through a fair value gap and you come back into the fair value gap and you go beyond the consequent encroachment, my expectation is that it will continue to rise through and finish out the fair value gap. I think that
Okay.
this was so important right here, this large wick to the top, that it took that out. I believe this is our future for tomorrow. Unless we take out the highs up here. Which we definitely
Makes
could.
sense.
I mean, we could come up here to 15,650, which would be phenomenal. But that would only take us to, if we took this range, this price range. Okay. Put a GAN box on it. We're halfway in.
Yeah.
Which that would help us. So additionally, you know, I really do enjoy the time that we can share our ideas on what's going on, because this is often the most time consuming part of trading, is understanding the charts and where you believe price is going to run next.
Yes.
Because like you said, there are so many fair value gaps, top, bottom, from years ago, from this year, from yesterday, from tomorrow, from whenever, that it can be difficult to understand where does price want to head. Now, I think we do a fantastic job of that, and our entries are getting better and better each day.
Yes,
But
and we're definitely recognizing different things and some issues. For example, I have actually a question based on your entry.
sure,
Go ahead and go to QQQ
sure.
and go into the 15-minute frequency. You took a play early on options for the downside
Up here,
on yeah, on a little
or
bit to that right, that exactly. You see how you were in the fair value gap right there on the left side? See that fair value gap off the 15-minute right there? Perfect.
yep,
I had an entry a little bit higher, right? Because I was playing based on a healthy order block up there because of
okay,
that. But throughout that whole time, once you drop to the five minute and you're looking at how price action is consolidating, I was 99% positive that it was going to drop from there, right? But I
right.
personally did not take that trade because I wanted to stick true to my specific strategy,
You
because then
wanted,
I wanted that fair value gap off that 5 minute to be hit next for the downside, right? So you see
right.
right. So that's the reason why when I zoomed in. So there's times where I take a healthy order block based of the 1 hour and that's my position. But there's other times when I zoom into the 50-minute, I won't see that healthy order block present. But then if I zoom into the 5 minute, I'll see something present there in the exact same zone that I have of the 1 hour. So finding these specific setups sometimes are also helpful. But based on today's entry, how you took your section there from puts, and you see how if you're looking at the 5 minute, I would have never thought off the 5 minute it was going to drop from there. But the fact that in the 15-minute you were in consolidating inside of fair value gap off the 15-minute frequency is what gave me the confidence that it was going to drop. I personally did not enter it because I already had a setup that I wanted to see first. But like things like that happen throughout the days when we're trading is good experience, because next time if I see this consolidation, I'm actually going to take the risk and go for the downside.
Yeah, and like I said, I play a very specific strategy. It and it requires and it will not work without you being able to hold the contract
Oh
and
yes.
allow drawdown. But on the flip side, you were able to not leverage a lot of money. So I saw in your trade, you went almost at the money contracts today. That was
Yes.
super cool. That was super cool. But here's how I hedged against that. I spent, I think, just over $400 on 10 contracts
Yes.
and came out with with almost 40% profit on on average. But again, if we look at that initial contract price at 0.75, where was my last average down? 0.2.
Yeah, 0.20.
Right. To be able to hold that from 0.75 to 0.20, you have to believe in what you're doing so much that that $400 could run to nothing
Yeah.
and you'll be okay. But what I will say is that it is worth it if, to leverage into a small play. So as ICT says, taking the small contracts, taking the small plays. Those are good. Those, like the little tester plays are great because if you're wrong, it was just one contract.
Yeah.
No harm, no foul. You're not risking thousands and thousands of dollars. It was like, you know what? Like a micro, you are willing to swing overnight. What if you took
Yeah.
one $50 contract and said, you know what? If it runs, great. If it doesn't, it doesn't. And if it runs against me 10% or 20%, so now my $50 turned to $40. Okay, I'm done. I'm out. But for that to happen would take quite some time and quite a bit of movement. But then it could also go in the other direction too. And it's like, wow, I got in at a place of a likely reversal. So wherever I have averaged down, the places of likely reversals.
Yes.
So,
I heard that.
mm-hmm. But so let's double check that. Like, let's actually look at the actual times. My biggest thing is transparency. So I want to make sure that whatever I am doing, everyone can see it. So let's see here. We got in 0.65 at 8:37. So on here will be 9:37. So we got in on this candle. Yeah. Then we went and got 60% straight off the bat. It was fantastic. Great play. Great play. 9:28. So 10:28. This candle. This is where I began to average in.
Mm-hmm.
Because again, likely place of a reversal. Then we went on to 9:44. So 10:44 up here. Grabbed again. Then we went again for one more at 10:30, so 11:34 up here. So there is a rhyme and reason to this.
Wait, that was your last entry?
Nope, I have one more.
Okay, I was about to say, I think you had one more. Yeah, because I'm looking at my time zone when I put that I got in 3 cons when I tagged you.
So 12, so 151. We
Yeah.
got in up. we got in right here.
Yeah, at the very peak, because that's when I got in. Yeah, I got in at the very peak. And I was
So,
2 contracts out of my 2 strikes out. So that was you were in 370, right? If I'm not wrong.
370, 370. I got in at, yep, 370.
Yeah. I went in with 371. So it was just 1 strike ahead of you.
Right. So all places of likely reversals, and but that's where I gauge the average down. Now, in the videos to come, we'll discuss more about averaging in with options contracts, and we'll go from there. But I want to thank you for taking the time today and tonight. It has been incredible learning with you and discussing our trades. And I know going forward there will be so many more times that we're going to learn from each other, and the market is going to teach us something that we thought we hadn't knew or known all already.
Yeah. Yeah. Well, thank you for the invite again. It was a good experience today.